Today, we're diving deep into NRG Energy, ticker NRG, a powerhouse in the energy and home services sector. With its stock soaring over 60% this year, is NRG still a buy, or is it time to cash out? Stick around for a detailed breakdown of its financials, growth prospects, and risks as of August 29, 2025. Let's get started. NRG Energy, ticker NRG, is a Fortune 500 company headquartered in Houston, Texas, and a major player in the energy and home services industry across the United States and Canada. Founded in 1989, NRG operates in multiple segments, including electricity generation, retail energy services, and smart home solutions through its Vivint Smart Home brand. From coal and natural gas to solar and battery storage, NRG produces and sells electricity to millions of residential, commercial, industrial, and wholesale customers under brands like Reliant, Direct Energy, and Green Mountain Energy. First, let's understand what NRG does. NRG Energy operates through 5 key segments. Texas segment. This is NRG's bread and butter, focusing on customer operations, power plants, and market activities in Texas. Texas is a massive energy market, and NRG is a leading retail electricity provider here, benefiting from the state's deregulated energy market. East and West services other segments. These cover NRG's operations in the eastern and western U.S., as well as Canada. They include power generation from coal, oil, natural gas, solar, and battery storage, plus services like demand response and energy efficiency solutions. Vivint Smart Home. Acquired in 2023, Vivint is a game changer for NRG. It's a cloud-based smart home platform offering hardware, software, and services like home security, professional monitoring, and energy management. With 2 million customers, Vivint diversifies NRG's revenue beyond traditional energy. Corporate activities. This includes NRG's investments in renewable energy, electric vehicle services, and other innovative solutions. NRG's diverse portfolio is a strength. It's not just a utility company. It's a one-stop shop for energy and home services, serving over 8 million customers across North America. The company also trades in power, natural gas, and financial products like futures and swaps, giving it exposure to multiple revenue streams. Plus, NRG is capitalizing on the clean energy trend, offering renewable and low-carbon products, which aligns with the global push for sustainability. Now, let's dive into NRG's financials as of August 2025. The company released its Q2 2025 earnings on August 6th, and the results were a mixed bag, but there's a lot to unpack. Revenue. NRG reported $6.74 billion in revenue for Q2 2025, beating Wall Street expectations of $6.45 billion. This was driven by strong performance in the Texas segment and improved retail margins, particularly in residential and commercial markets. However, revenue was flat year over year, which shows NRG is holding steady but not seeing explosive top-line growth. Earnings per share. Adjusted EPS came in at $1.73, slightly missing the consensus estimate of $1.74. For context, Q1 2025 was much stronger, with an adjusted EPS of $2.68, beating estimates by 93 cents. The Q2 miss caused an 11.93% drop in NRG's stock price pre-market on August 6th, reflecting investor disappointment. Still, NRG reaffirmed its full-year 2025 guidance, expecting adjusted EPS between $6.75 and $7.75, trending toward the upper end. Net income. NRG posted a GAAP net loss of $104 million in Q2, a stark contrast to Q1's net income of $750 million. This swing was partly due to accounting rules around derivative contracts, which can create volatility in reported earnings. On a non-GAAP basis, adjusted EBITDA was solid at $909 million, up from last year, with an EBITDA margin of 12.38%. Cash flow and shareholder returns. NRG is aggressively returning capital to shareholders. In 2025, the company plans to repurchase $1.3 billion in shares and pay out $345 million in dividends. Through July 2025, NRG completed $768 million in share repurchases and distributed $173 million in dividends. The current dividend yield is around 1.19%, with a quarterly dividend of 44 cents per share, or $1.76 annualized. Balance sheet. NRG's market capitalization is approximately $28.2 billion as of August 28, 2025, with 195.51 million shares outstanding. The company has increased its target leverage to less than 3.0x, reflecting confidence in its enhanced credit profile after recent acquisitions. However, high leverage remains a concern, which we'll discuss later. Overall, NRG's financials show resilience, with strong cash flow generation and a focus on shareholder returns. The Q2 EPS miss was a hiccup, but the reaffirmed guidance and robust EBITDA suggest the company is on track for a solid 2025. Let's talk about NRG's stock performance. As of August 29, 2025, NRG closed at $145.56, down slightly from its all-time high of $173.91 on August 4, 2025. The stock has surged over 60% year-to-date and 115% over the past year, significantly outperforming the S&P 500's 7.7% return and the U.S. utilities sector's 13.7% return. The 52-week range is $76.13 to $175.96, showing incredible growth from its low. NRG stock is trading near the top of its 52-week range and above its 200-day moving average, signaling strong momentum. However, technical indicators like the Relative Strength Index suggest the stock may be overbought, with some analysts noting bearish divergence on monthly charts. This could indicate a potential pullback in the short term. From a valuation perspective, NRG looks attractive. It trades at approximately 7.5x EV/EBITDA, which is reasonable compared to peers in the utilities sector. The price-to-earnings ratio, based on trailing 12-month EPS of $2.28, is around 65, but this is skewed by GAAP accounting volatility. Using forward EPS estimates of $6.75 to $7.75, the forward PE is closer to 19 to 22, which is more in line with industry norms. Analysts' average 12-month price target is $175.38, implying a 15.57% upside from $151.75, with a high target of $200 and a low of $104. 6 analysts recommend a buy, 1 suggests sell, giving an overall buy rating. NRG's beta of 1.91 indicates it's more volatile than the market, so expect some price swings. Still, the stock's 12% free cash flow yield and undervaluation relative to its fair value, estimated 65.9% below by some models, make it appealing for value investors. NRG's growth story is what's really exciting investors, and it's tied to 2 big trends: AI and electrification. AI and data center boom. The rise of AI has driven a surge in demand for electricity to power data centers. NRG is capitalizing on this with new partnerships, like those with Paulon and Menlo Equities, which could scale its capacity to 6.5 gigawatts long-term. In Q2 2025, NRG signed 295 megawatts of data center power agreements, with potential expansion to 1 gigawatt. The company's $6.4 billion acquisition of LS Power, set to close in Q1 2026, adds 13 gigawatts of natural gas generation and a 6 gigawatts commercial and industrial virtual power plant platform, positioning NRG as a key player in this space. Texas energy market. Texas is a hotspot for energy demand, and NRG's strong presence here is a major advantage. The company secured a $216 million loan from the Texas Energy Fund for 2 new natural gas units at its T.H. Wharton facility, boosting capacity by 456 megawatts. NRG also increased its Texas residential VPP target from 20 megawatts to 150 megawatts for 2025, leveraging smart home technology to manage peak demand. Vivint Smart Home. Vivint's 2 million customers provide a stable, recurring revenue stream outside traditional energy. NRG is integrating Vivint's technology with its energy offerings, creating a unique value proposition for consumers looking for smart, green solutions. Renewable energy push. NRG is investing in solar, battery storage, and low-carbon products, aligning with the global shift to sustainable energy. This not only diversifies its portfolio but also mitigates risks from environmental regulations that could impact fossil fuel plants. These initiatives position NRG to benefit from rising power prices, electrification trends, and the growing need for reliable, sustainable energy. The LS Power acquisition, in particular, transforms NRG into a more balanced generation company, reducing its reliance on retail and boosting long-term growth potential. No stock is without risks, and NRG has a few worth considering. High leverage. NRG's increased target leverage to less than 3.0x, combined with $3.2 billion in debt assumed from the LS Power acquisition, raises concerns about financial stability. If power market volatility impacts cash flows, servicing this debt could become challenging. Volatile power markets. NRG's exposure to power, natural gas, and commodity trading means its earnings can be unpredictable. The Q2 2025 net loss, driven by derivative contract swings, is a reminder of this volatility. Environmental regulations. While NRG is investing in renewables, its 13 gigawatts of coal, gas, and oil plants face risks from stricter environmental policies. These could erode profitability if regulations tighten further. Technical overbought signals. As mentioned earlier, technical indicators like RSI suggest NRG may be overbought, potentially leading to a short-term correction. Short interest has also risen by 28.54%, indicating bearish sentiment among some investors. Competition. The utilities sector is competitive, with players like Vistra and NextEra Energy also vying for market share in the AI and data center space. NRG will need to execute its strategy flawlessly to maintain its edge. Despite these risks, NRG's diversified business model, strong cash flow, and strategic focus on high-growth areas like AI and renewables provide a solid foundation to navigate these challenges. That's our deep dive into NRG Energy, ticker NRG, as of August 28, 2025. From its strong financial performance to its strategic bets on AI and renewables, NRG is a stock worth watching. What do you think? Are you bullish on NRG, or do the risks give you pause? Drop your thoughts in the comments below, and let's get the conversation going. All right, that's all from our side. Thanks for watching, and we'll see you in the next one.